Okay, good morning, guys. My name is Gavin. Welcome to Alphachain's weekly market brief. It is a Monday. Happy Mondays. It is the 14th of March, and I'm going to give a quick overview of what's taking place in the markets. Now, let's start with some of what are the key developments. So, the chart that you see in front of you, guys, the chart that you do see in front of you, let's make sure that you can see that. One moment, new share. Okay, so let's begin with the FX markets. I think the FX markets are quite important. Whether last week, one of the best trades of the week, the trade of the week would have been dollar yen for me. Just looking at the sort of the consolidation that had taken place for a number of days, if not a few weeks, and all of a sudden we had a large bullish move breakout taking place last week, only moving in one single direction, price almost testing the 118 handle. Now, it was a bit of a roller coaster week last week. It was driven purely by the developments in the Ukraine. The markets had been eager to rally on any piece of positive news, but they seemed to sort of always get disappointed afterwards. So an example of that would have been where Russia and Ukraine made some progress in their third meeting, I believe. And then later on, we had some pessimistic news that came from Moscow, right? So it just seems to sort of go back and forth in regards to whether the meetings are starting to show a little bit more, they are coming to sort of a middle ground, but overall we've seen the attacks intensify. Now, one of the key developments that came out from the weekend was the fact that we had Russia launched missile attacks on the western side of Ukraine, near Lviv. There was a piece of military base located there. And one of the key elements for Russia at the moment is the fact that the amount of military goods that are being provided to Ukraine from Poland. So just 10 miles off Poland, and Poland is a NATO member, there was a military attack that had taken place. But if you look at markets from this morning, a lot of that has been disregarded, even though if you look at some of the newspapers are showing that specific attack. But markets are absorbing that information, but they've also heard recently that there's more positive talks during the sort of negotiations between Russia and Ukraine. So that's the emphasis at the moment, that all eyes are going to be on this Russia sort of Ukraine talks that are taking place. But looking at the FX markets, the dollar's been the superpower, should we say, from previous week, right? Looking at the daily time frame, you can see sort of the number of days, the bullish emphasis coming through, testing the 118 handle. So we've had a very strong consolidation, right? If we look at the overall consolidation from the most recent high, this is the 4th of January high, 22. It went to test down to its lows around the 14th of Jan, a retest there, and then consolidated back up to sort of the prior high, which is the 9th or 10th of Feb. From that point onwards, it was mostly just moving sideways. Okay, mostly moving sideways. That sideways action had started from the 24th of Feb through to the 4th of March in this consolidation, and then we had the breakout. Okay, the breakout coming in from the 7th, that's the 7th, the prior week, then the 8th, 9th, 10th, 11th, and so on and so, right? So we've had a very strong breakout there. Maybe let's dial to the weekly time frame, look for the next key level of resistance, but probably be around the 118.70 handle, where we've got this key region here. I might just zoom in, mark these key levels as well. So let's put in a horizontal ray. I want to sort of test some of these key levels. Oh, they're not going. Hang on. Yeah, so got support level, support. It's a bit of a test in this region here, but that's a key level of resistance. This is going back to 2016. Okay, so towards early 17 and sort of late 2016. And these are the levels that we're testing at this current moment now. So that's the next key level of resistance for dollar yen. A lot of dollar strength coming through, guys. A lot of dollar strength coming through. Looking at the dollar index, as you can see, sort of when we still got some movement, right? So we still got some potential upside, certainly, if you're looking at just the dollar index, right? So if you're looking at the next level of resistance around the 102.80 handle, we've got this trend line in place. We've still got some movement back up to this point over here. So that's almost a free move back up to these levels of resistance. So I can see more strength coming in the dollar index in the upcoming trading week. So dollar certainly was one to watch at this current moment. Look at the volatility index, vol, it's around 30. It's still at those elevated levels as I've previously mentioned. On average, you see vol somewhere between 16 to 20. That's sort of the average over a longer period of time. But at this moment, we're just seeing elevated vol with the Russia-Ukraine situation occurring and just the ongoing scenario there. Looking at currency strength now. So looking at currency strength, I might just enlarge that, see if that comes up. There we go. Currency strength at this moment. Dollar index. This is based on the daily time frame at this moment, based on the daily time frame. But the dollar is the strongest. Then you've got euro, sterling, and yen. So out of all four, I mean, you want to pair the strongest with the weakest. And right now, it is that dollar-yen situation. So we could certainly see more directional move here. But if we switch it down to maybe a lower time frame, it's going to take a minute or so to load. Let that load. While that loads, we'll come over and look at maybe sterling-yen. Sterling-yen at this moment, moving to the upside, we're seeing a lot more sterling strength in comparison to the yen. So there's a lot of weakness in the yen overall. Okay, there is a lot of weakness in the yen, and that's probably largely due to what we've heard over the weekend. Okay, so we've seen over the weekend, over the last 24 hours, that there is a potential COVID breakout. Okay, so we've seen that there is now a comeback in regards to COVID. If I just bring this up over here. Yep, so maybe COVID comes back. That's what we're seeing at this moment over here, right? So it is believed that there's going to be 17.5 million residents in Shenzhen going into lockdown for at least a week, okay? So that's the biggest concern at this moment with ASPAC, okay, Asian Pacific region. And that's why we're seeing potentially weakness with the yen, right? Okay, so what else? What other developments are there? So coming over to the economic calendar, let's bring up the economic calendar, especially concerning the FX markets. Just give me a moment, just bring that there. Okay, so just note that there's been a daylight saving time shift. Okay, there has been a daylight time a shift there. So what that means for markets actually is that what we're going to see is, I'm just bringing it up, I've got it here somewhere. Okay, so as the US clocks have changed to EDT from EST, that took place last night, that now means that the London to New York time gap is going to be 4 hours rather than 5 hours, only until March the 27th, okay? So that means the US markets are not opening 2:30 p.m. UK time. It's taking place at 1:30, an hour earlier. So there's a 4 hour distance, 4 hour gap there between the US and UK time. Okay, so just be mindful of that. But now that we know that, okay, let's move on. Looking on to the week ahead, what is going to be most relevant the week ahead? Well, for me, it's going to be central bankers, of course, right? We've got 3 key central bankers all releasing their interest rate decisions, 2 of which are forecasted to raise interest rates. So it is expected to be a very volatile week ahead. So let's start with, okay, so looking at today, Monday, mostly quiet, as you can see, all of it's low impact news. So we're not too concerned about any macroeconomic data starting Monday. But going into Tuesday, overnight, we have monetary policy meeting minutes. This is the Aussie minutes based on their previous interest rate decision. Then we have well, let's have a quick look. We do have unemployment rate in the UK. So 7 a.m. unemployment rate, claimant count change, average earnings index. It's marked down as low, but this will be high impact if you're trading the UK session. Going on to the afternoon, we've got European data or sentiment, economic sentiment, German ZEW sentiment coming out. I think what's going to be relevant, of course, is the PPI and core PPI data that's been released in the US. And look, it's being released an hour earlier, as you can note, right? So usually data being released in the US is at 1:30. It's taking place at 12:30. So just be prepared for that, or take earlier lunch. And then going on to Wednesday. Wednesday is the key day, is a very important day. Nothing during the sort of London session, London Open, but going on to sort of almost a US session, US Open, in the afternoon on Wednesday, we have a lot of key data being released. We have, of course, CAD, the CPI data. So we're going to get some inflation reading from Canada. In the US, we have retail sales and core retail sales being released. But that evening, instead of 7 p.m., at 6 p.m., we're going to have the FOMC economic projection statement and the funds rate, right? And as you can see, it's already forecasted that we're going to expect a rate hike. Current rates at 0.25. We're looking at another 25 basis point hike to 0.5. Okay, that's what's forecasted. Then going on to Thursday, and Thursday is another relevant day because we have the Bank of England with their interest rate taking place at midday. Okay, so Bank of England with their interest rate taking place at midday. We have the MPC official bank rate vote. We also have the monetary policy summary, official bank rate. And again, you can see similar here. It's already been forecasted for a rate hike of 25 basis points from 0.5% up to 0.75%. Okay. A bit of commodity data there. So you've got natural gas storage coming out a little bit later on in the afternoon on Thursday. And that's it. That's the sort of key relevant part to it. We do have the Bank of Japan press conference. Okay, so the BOJ policy rate decision is marked down as medium to low impact news. It's very unlikely that they're going to be changing their guidance, right? We're not too concerned about their rate decision. They've not changed their rates in many, many years, but the focus is on their forward guidance. And I don't see that there's going to be any change in their rhetoric. So that will be regarded as an uneventful data release. Okay, so yeah, you know what to expect for the week ahead. So it's going to be a very important week, especially for the Bank of England and the Federal Reserve in regards to, do they actually go on to raise rates as forecasted in the markets? Okay, let's shift away. Give me a moment. Okay, so looking at the VIX on the lower time frame, we're in the 15-minute time frame, we can see some euro strength coming in as European markets are just opened up. And then you've got sterling and then dollar, and then yen is still the weakest currency at this moment. So on the lower time frame, there's a lot more euro, a bit more euro bids arriving. Switching over, let's switch over to a different screen. Okay, so let's start with some of the commodity markets. And what we've seen in the commodity markets is a bit of a pullback, right? So we've had a very strong bullish rallies taking place, in the gold markets. Gold going on to close enough test the prior high, all-time high, and then it's now retraced back down to around the 1970 handle. Now it's looking for the next level of support before we see another maybe bull run taking place. It will also need to be supported by a catalyst from your fundamentals of the geopolitical risks that we're seeing taking place at this moment. But at the moment, you know, we have gone on to test a strong level of resistance. We're just seeing a bit of profit being taken. So just be mindful that we're waiting for price to show some support at a key level. Switching over to oil, very similar situation in the oil markets as well. I'll come over to nickel in a moment, potentially, but just looking at the oil markets, prices going on to sort of test over the 130 handle. Since then, we've retraced back, we've traced to the 106 handle at this current moment. Again, are we going to find support is the question here. Are we going to find more support? There was there were news that the US were looking to release another sum of barrels of oil that they have in their reserves. But again, that's not been confirmed as of yet. Okay, shifting over, let's shift over. And there's something else that you may be wanting to discuss. Is this. So Chinese tycoons, big short on nickel, trips up substantially. Now, what we've seen in the price of nickel, nickel has risen to $100,000 per ton last week. That's what had taken place. So much so, it risen in one direction, right? A significant short squeeze that we've seen that the London Metal Exchange had to halt trading. They had to halt trading, right? And we're seeing that the significant short position that had been taken, they need to sort of cover an $8 billion on their position, an $8 billion position that is. At this moment, they've not gone on to discuss about that repayment. They've asked for a delay, and it is what has led for the price of oil, the price of nickel, to go to these exponential sort of levels, right? That's not been sort of tested at any point before. So, yeah, I mean, you know, certain markets are taking a substantial hit, and we're seeing individuals get substantially sort of wiped out. And this is a large group that's involved in trading metals, right? And it's almost brought the London Metal Exchange to a stop, right? And we've seen, you know, trading being halted there. And looking where the location is, this is where it's located. I've been there quite a few times, actually. So, yeah, this is sort of a key news that had taken place. And if you're aware of London Metal Exchange, it's pretty much how it used to be back in the day when you had floor traders, pit traders, right? A lot of the action is being done on the trading floor in a, let me see if I can find an image. But it's let's spread this over. This is your London Metal Exchange. Take that picture there. That looks a little bit quite active there. But that is the modern trading pit. This is the modern trading pit, right? You have a number of companies. You have your floor traders over here. These are the actual traders over here. You have sort of the ones behind other ones that are providing all the key information, going back to the desk, and then, you know, filling in those orders. So those are your runners. You have your runners. You have your floor traders. And then at the back over there, you're going to have sort of each individual booth, which is located, which allows them to sort of, you know, execute the trades and book in those trades on their computer systems. So yeah, this is the London Metal Exchange. Been there a few times. Since COVID, I don't think you're allowed to actually sort of visit the London Metal Exchange. But yes, this was halted last week, and we just saw the price of nickel substantially skyrocket to 100,000 per ton. Okay, moving on. Let's have a look. So we've covered the oil markets and a bit of the commodity space itself. Looking at equities, what does it fare? What are we seeing at this moment? So maybe let's start with the S&P 500. S&P 500 is still down. It's still down. If we just look at percentage from those highs, we're still sort of in this region here. We're still down 12.5%, almost 12.5%. So yeah, the technicals are still indicating more bearish. Okay, the technicals are still more bearish, right? Yes, last week's session, you know, prices did go into sort of test these new highs, pull back, and then it's now looking like it's rejecting some of these 4,300 levels, and we're starting to potentially move lower, even though the morning bid is showing a bullish sign. Looking at the Nasdaq, let's just switch over. Highs down to sort of the price at the moment. Yeah, so it's still down 20%. So this is we're still in that region. When you see a correction of 20%, that is bear market territory. Okay, that is bear market territory, right? You know, a sell-off of up to 10%, so somewhere in this range here. So sell-off around 10% from those highs is a pullback. Anything between 10 to 20% in this range here is a correction. Anything above 20% is bear market. Okay, so it is still a bear market, as we can see, sort of with just over the 20% mark there. So again, the technicals are still more to the downside. We're still forming those lower lows and lower highs based on the closing of candles, not just the wicks. Switching over to European markets actually fared a little bit better, but we had a larger sell-off taking place in the European markets. So if we look at the DAX, and we take the DAX from those highs, and let's have a look at where those markets are. That high up there. That's the low, which was almost a 23% move, but a decent amount of pullback there, right? So we pulled back from those 23% sell-off. Now we're only a 15% sell-off at this moment. So we're back in the corrective level, not in a bear market as of yet. But hey, is this the dead cat bounce, right? Are we seeing, because of the larger sell-off, there was a bit more of a bid taking place, but then we might see the next leg lower taking place. The technicals are still to the downside. We're not seeing some patterns as of yet. I might dial down to a 4-hour time frame. So what type of formation are we seeing here, guys? What type of formation are we seeing here? There's quite a few formations that you can see here. If I just trend line from those highs, that trend line in place. So with this downtrend line, we've got lower lows, lower highs, bit of consolidation in this region here. Right, so you can see sort of consolidation between that and these two highs, right? Which led to the breakout. Yeah, the breakout is right there. It's consolidation, breakout, retest, and then a move lower. Let's move lower. And that was the gap lower. So with the gap lower, it stayed in this price range, and then it retraced back, filled in the gap, and then it decided to sort of reverse in this order. Now, are we seeing an inverse head and shoulders pattern? Is that what this looks like? If that's the case, then your neckline will be from this point to that point there. Right, so what we're seeing is the inverse head and shoulders. I might use, there is a tool, I believe, that I can use on here. Let's have a look. Where is that tool? That's fine. Might be one of these, I believe. There you go, head and shoulders. Stay from that point, that's your left shoulder. So head, that's the right. Okay, so that's the pattern that we see at this moment here, right? Might switch to that one there, right? So yeah, so there is a potential inverse head and shoulders. We do have a prior trend. That's the key point there. We do have a prior trend. Got the left shoulder, you got the head, you got the right shoulder. We'll just look for the break above this level. So that's the relevant part here, is that you need a close of a candle above this range for that to confirm this. And if you're taking this height, so let's just take it from there to that point there. And we'll project the MPO. Let's just say it's there. Let's bring it a bit lower. Yeah, so that takes you back up to these levels. That takes you back up to around the 15,500 figure. So that's the target there. So 15,500 figure, if we're seeing this as the inverse head and shoulders. Okay. But again, you got to wait for these technicals to confirm. It's not confirmed as of yet. You might see price action sort of converge in this region over here, and then you see the next leg lower, right? And it's because we've seen a larger move to the downside. It's potentially why we've seen a larger recovery in the DAX. Looking at the FTSE, let's have a quick look at the FTSE. The weekly time frame. Yep, so we spoke about this key level of resistance, this trend line in place, strong rejection. Look how some of the sometimes geopolitical or fundamentals coincide with technicals, right? And then you have the sort of Russia-Ukraine situation occurring, that geopolitical risk, and then we have that sell-off that's taken place on the weekly time frame, and it's pulled back a little, but again, it's still below this trend line. It's still, price action is still below the trend line over here. Yeah, it's still bearish at this moment. After, especially all we're seeing is a bit of a pullback. You could look at 50% of the candle itself, so it's as a midway point, as a potential sort of retracement, and then the next leg lower. But again, I don't see the technicals changed at this moment here. We're still bearish overall. Overall, it's still bearish. Okay, and I think that's the wrap. That covers sort of all key markets, some of the news that you need to be aware of. As I mentioned, for the week ahead, the focus will still remain Ukraine and Russia. That is extremely relevant, but there are other catalysts that you need to add to the mix. Right? Last week's session is a little bit easier. It's all about risk on, risk off trading. Right? Trade when there's, be bullish when you have positive news, when it came from the negotiation table between Russia and Ukraine. But then when you hear pessimistic news, for example, Belarus looking to invade Ukraine was one of the news that I read over the weekend. So Belarus was looking to get involved as well. So, any sort of negative news, you would see that as risk off. But you've got to add to the mix now. You have macroeconomic data to be sort of concerned about. Inflation is still in the background. It's still there. Okay, it's still a major concern for governments and central bankers. So we have 2 key rate decisions. We have 3 in total this week, but the 2 key rate decisions and that focus is going to come in the mid part of this week, Wednesday and Thursday. Just be aware there is that 1 hour reduction in the time difference between UK and US. So it's not a 5-hour gap, it's a 4-hour gap up until the 27th of March. All data in the US can be released at 12 and 12:30 rather than 1 and 1:30. And of course, the federal sort of central bank will be releasing their interest rates at 6 p.m. on Wednesday, and then we have the Bank of England at midday on the Thursday. Those are the 2 key relevant times. Ensure that you don't apply too much risk to your positions. One of the key areas that I'd seen from one of our traders just recently this week, I'm just going to see if I can bring up his stats quickly, but he had achieved his target. He had achieved his target in the shortest of period of time, and he was trading still under the incubation rules. So he's still trading under the incubation rules, and his risk was 0.05 lot sizes on most of his trades. Okay, and he was able to make substantial gains because of the volatility in the market. So use the volatility as a way of, yes, exercising your trades, but don't go in with the same amount of risk. You don't need to take the same amount of risk for the reward that you're looking to achieve. Okay, so aim to keep your risk minimal risk on the trades that you do take. Look to maybe add into positions or scale into positions, and just be mindful of the shift from risk on to risk off that's likely to occur during this week. Okay, fantastic. Enjoy the upcoming trading week, and I'll speak to you guys soon. Take care. Bye-bye.